Hello, everybody. This is Alan Ellman, the Blue Collar Investor. Welcome to another one of my sample trade videos with trades actually taken from one of my option portfolios. This particular trade was started on Monday, April 21st. It's a weekly cash secured put trade, a defensive posture, as I've been doing over the last 3 months with our economy in a bit of a turmoil because of the tariff situation and the uncertainty in the stock market. So I've been doing a lot of cash secured put trades deep out of the money to give myself a little room on the downside. This particular trade I executed on Monday was with Palantir Technologies listed on the Nasdaq exchange under the ticker symbol PLTR. Again, it's a weekly trade initiated on 4/21, expiring tomorrow, Friday, April 25th, 2025. So let's get started now. Why did I select Palantir? Well, you could see it's one of the stocks. You're looking at just a little section of our 9-page stock report that we provide to our premium members. And you could see here that Palantir, it's actually located in the gold section. I highlighted that particular stock with orange brown to highlight it, but it's in the gold section, which means that this particular contract month, Palantir is going to report earnings on May 5th. However, it also has weekly options. And so we could use a weekly option that expires before the earnings report and not have to worry about the price action resulting from either a disappointment or an earnings beat. Now you can see here that Palantir was ranked 3 on the IBD 50, which is extremely high from both a fundamental and technical perspective. And it's located in the software industry segment, currently rated B. It was rated A last week. Now, the mean analyst rating is an above average 2.89. 1 to 5 is 1 is the best, 5 is the worst, so it's a little above average. And the on balance volume was bullish, meaning more cash was coming into this stock on up days than on down days. Now, the actual implied volatility was really high, 90.3%. And that's why it was able to go so far deep out of the money with this put strike and still generate significant annualized returns, as you will see shortly. So those are the reasons why I selected Palantir as one of my underlyings for the current weekly contracts. Now, here's our trade management calculator spreadsheet showing the entries for the initial returns. At the time that I made the trade on Monday, Palantir was trading at 90.49. I sold the deep out of the money 79 put for 52 cents a share. Now I did 400 shares underlyings or 4 put contracts. Now we take a look at the spreadsheet. It tells us, of course, 5 days to contract expiration, and that the break-even price point was 78.48, starting from 90.49, the initial price when I entered the trade. Now the actual returns in the brown cells are 0.66%, 5-day trade. That annualizes out to over 48%. Now, what if Palantir drops from 90.49 to below the 79 strike and we take no action to buy back the contract? Well, then we will purchase Palantir at a break-even price point of 78.48, which represents a discount of 13.27% from when the trade was initially executed. So that's the initial calculation. So let's move on now. You could see here, this is the broker confirmation of my trade. The 4 contracts were sold at 52 cents. So $208 minus some really tiny commissions were injected into the cash account of my broker. And that's where I stood on Monday morning when I executed this trade. Now, let's move forward now to Thursday. This is when I'm making the video, and it's about 10:30 in the morning. So we got another day, all day tomorrow, and most of today for price action. But Palantir has gone to the moon. It's up from 90 to over 104. Well, that right then tells me, is there a rolling up opportunity? Buying back the original 79 short put and rolling it up to a higher strike, but still deep out of the money. Okay, I still want out of the money. So here is my broker confirmation that I bought back the 4 contracts of the 79 put for a penny a share, $4. And then I rolled up to the 98 put strike. Remember, at the time, Palantir was trading at 104.64, and we have a little less than 2 days to expiration. So that's still deep out of the money, the 98 put. And I generated 33 cents. So I had a net of rolling up of 33 cents a share. Okay, so let's now take a look at the current trade status. Thursday, okay, it's the 24th of April, about 10:30 in the morning. My total premiums from the original premium minus the net credit for rolling up came to $340, less some very tiny trade commissions. The cost basis, or the amount of cash I needed to secure the latter 98 contracts, was $38,864. So that means my unexercised return, assuming Palantir does not drop below the 98 strike, is 0.88% for the 5 days, and that annualizes out to over 64%. Now, to realize this, Palantir must remain above the 98 strike. And I just took a quick look at my phone, and it's currently trading a little bit higher than 105, so it went up a little bit since I started making this video. So let's just summarize now. You could still generate significant returns even with a defensive 5-day trade, in this case a cash secured put trade. And we can craft our trades to what's going on in the market today. If it was a normal to bull market, I more than likely would have done an out of the money covered call. But I want to be a little more defensive. I want to have a little more protection to the downside. And the fact that Palantir did in fact go up significantly doesn't change my mind that I did something wrong, because this trade was crafted to what was going on in the market currently. So in the case of Palantir, we still were able to get robust returns, partially due to the very high implied volatility, a lot to do with it, and also the rolling up opportunity that we were able to take advantage of. So ladies and gentlemen, I hope that these sample trades real trades taken from my portfolios, you find helpful. So far, these defensive trades have worked out beautifully, even in this challenging market environment. But I know, based on 30 years of trading, that some of these won't, and I'm going to share those with you as well. But so far, everyone since I started doing these videos has worked out well. Hopefully, it'll keep on going that way, but somewhere along the line, we'll run into a bump in the road. So I hope you enjoyed this video. I hope you benefited. I thank you for taking the time to watch and listen to this video. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.